Hey, welcome to the show. I'm Mitch Goldberg. You're watching Be the Boss of Your Money because I want you to take control of your money. Because if you're not in control of your money's in control of you. And you know what the worst thing is? Your lack of money could be what's controlling you. And it makes you do things and say things and think things and feel things. It's a terrible insecurity that can be cured with better money habits. Part of that is investing, part of that is saving, part of that is insurance, but these are tools. The real issue is the mindset that you need to adopt in order to be better with your money. Automation with your savings and your spending. Not necessarily spending all your time shopping for bargains, but spending your money in a way that creates more efficiencies in your life, like things that free up more time for you to do more productive things in your life. And especially, above all things, to really get a grip on what you have, where you stand, where you need to go, and how big is that gap. Some people see the gap as so big that they decide to do nothing because they don't want to face it. It's the hardest, most fearful thing, to face that big gap between what you have now and what you need to have in the future so that one day you don't run out of money. It's a very frightening thing. So people put it off and put it off and put it off. But there are things you could do to close the gap. You cannot be self defeating. Really, you can't be self defeating and just think the gap is so big that I'm not going to do anything about it. Just because the gap is too big for you to overcome doesn't mean you could overcome it a little bit, doesn't mean you could close a little bit. And sometimes what you see as the gap isn't as large as you expected. Don't forget, one day we collect Social Security, we get to go on Medicare, and there's other things that you might not be thinking about that could help you. Believe it or not everybody needs a multi-million dollar savings and investment portfolio to retire. There are things you could do to get ready, expenses you could cut, expenses you know that you'll have coming up. And it doesn't mean you live on bread and water. It means you set a certain aside amount for spending and you have to spend it all. Just a mindset, right? This is what I have to spend and I'm going to spend it all. This way, you pay yourself first. You put money aside before you spend the rest of your money because we all know that if you're planning to save and invest the money that you have left over at the end of the month, all too often, there isn't any money left over at the end of the month. This is why we say save and invest the first day of the month and don't wait until the last day of the month. Let's roll a quick intro. We're going to talk about the huge earnings beat and big news out of Disney. The stock is soaring after market. Taylor Swift is giving Disney a really big lift, a huge lift, I think. And what else? The Dow is just about 5,000. I'm sorry, the Dow, oh my God. The S&P 500 is just about 5,000. We've been talking about that. It's going to hit 5,000 very soon. We're less than 5 points away today. We almost hit it today intraday. We hit 4,999 and change. And I want to talk to you about a personal account template for Excel spreadsheets that I'm making. And I want to let you know if you'd like that Excel spreadsheet, just let me know. If you have any questions about what we're talking about, hit me up in the comments. I'd love to hear from you. And if you just want to give me your favorite emoji or just say hello, let me know where you're watching. Let me know where you're coming in from. And also, when you like the stream, it helps the cause. It helps people see it, helps educate people, and we all get to be happier. So let's spread some cheer. Let's help the cause. Here is the intro. All right. Thanks so much for joining me. I'm Mitch Goldberg. If you want to take our conversation to a one-on-one, you want to talk about your financial planning, your investing, your personal finance, get your get your stuff together. Okay. You would reach out to me. You could check me out at clientfirststrategy.com. My contact information is there. You can send me a DM through social media, leave, a comment in the comments, you want to call or whatever, and we'll get together. It's probably worth a conversation for you and I. All right. So let's just start with the basics. All right. Let's share the screen. Pop myself up here. Let's just get rid of that. All right. So the Dow is up 156. NASDAQ 147. This is a pretty good day today. It's a good all-around day for the markets. S&P closed at 4,995 and some change, so we're less than 5 points away from hitting 5,000 for the first time ever. The Dow hit 38,000 for the first time ever a few weeks ago, and it's looking like it's getting ready to hit 39. And we've been talking about this, right? Dow 40,000 could happen pretty soon. We've been talking about S&P 5,000. Soon we'll be talking about NASDAQ. NASDAQ 18,000, new highs coming up. Oil 74. Oil's holding in there pretty steady. There's some chatter from the analyst community that oil production growth is going to start to slow down or not go up as much, and everything in between. We'll see. We'll see if peace comes soon. Maybe we'll get that ceasefire in the Middle East. I know Israelis rejected the Hamas proposal, but why would Israel accept any truce from Hamas, whose sole aim is to destroy Israel and kill people? So you're going to have a ceasefire until they do something diabolical again. I can understand not wanting to agree to a ceasefire. That's for sure. The 10-year, that's just my personal opinion. Right? The 10-year yield climbed a drop. It's 4.11%. And the VIX below 13, it's 12. 12 is pretty darn low. This is an indication of calmness in the market. Couple of things. The Dow, the major averages, by the way, you can't invest directly into an index, but you can invest into a security that tracks or mimics an index. I bet you have that memorized now too, right? We had a big rally in the fourth quarter. The market's been going up based on expected Fed cuts, and then people started to factor in 5 or 6 rate cuts this year, a few more next year, a few more the year after. I've been saying the whole time 2 or 3 rate cuts. I have to tell you, the economic stats coming out have been pretty darn good, consistently stronger than expected. In particular, the most important stats, the labor statistics. Inflation statistics have been moderating. We are finishing up a really strong earnings season. We're almost through it. We're more than halfway through it. It's actually probably about 3/4 of the way through it. One big tech company that has not reported earnings yet, it will report earnings on February 21st, is NVIDIA. That'll be the last of the giant tech companies to report. But NVIDIA went up today and hit a new record high today after backing off from its previous record. We'll see. The price target, I think, from Goldman Sachs is pushed to 750. The stock is in the low 700. So a little bit of upside, according to this analyst. We'll see if we get there. I mean, the way the stock is going, it could get there before February 21st. Then what do the analysts do? Do they raise to 800 or 850? We shall see. I want to warn you, want to remind, okay? The advice I give here on the show, is not meant to be specific to every viewer, because every viewer situation is different. Your personal finance, where you are in your life cycle. These are the things that bring me to your particular set of circumstances, which brings me to a specific personalized recommendation to you. So we have to generalize here. So the generalization is these big tech stocks are up, markets are up a lot. If you're at a point where the money that you have invested, you actually need for cash obligations over the next 12 months, it behooves you to take the money and run, as Steve Miller says, right? Come on, take the money and run. Ooh, Lord. You know the song. I mean, I'm not a good singer, but you know the song. Boom, boom, boom. Ba-dum, bum, bum, ba-dum, ba-dum. All right. Natalie, you're probably laughing right now. So that's part of personal finance. If you need help with that and you want help with what to do, you are welcome to call me. Or if you have a financial advisor whom you have a good relationship with, then call him or her. You don't have to be my financial advisor to enjoy the show and to ask me questions and hit me up in the comments with your questions. I love hearing from you. All right. This is a joy for me to do. I love doing this. Love educating. I've got the heart of a teacher, right? So that's one thing. But so the economy continues to be pretty strong. So not only could we stop seeing inflation moderate, we could see go up a bit, maybe recover a little bit, from its pretty big drop from its peak over a year ago. But we are starting to question the soft landing scenario. We're not definitely not questioning we're not thinking recession. I'm talking me, the market, the stock market overall. But we might just bypass any kind of landing and just keep plodding along with the economy, which means the Fed doesn't have to cut rates. Now, why would the Fed want to cut rates? If the Fed could leave rates where they are now, see, the Fed used to want rates as low as they could get them to be without causing inflation. But now it seems like the Fed wants to keep rates as high as they could be without causing recession. And why not? Do you remember that when rates were zero, everybody was screaming bloody murder? This is terrible. Rates are so low. It's hurting savers. It's hurting senior citizens because they can't get any interest on their savings in the bank. It's hurting banks because at zero, banks actually have trouble making money to some extent. All the terrible things about 0%. So now that the Fed raised rates to a historically normal level, now people are screaming, this is terrible. Rates should be lower. You just can't win. I do think a lot of this is political punditry because, depending on who you're voting for, who you're rooting for in politics, right now interest rates are too high. They're killing the economy. You're destroying the economy. When rates were zero, this is terrible. You're destroying the economy. You're sending a bad message. So in the meantime, the stock market's up. Right? In the meantime, the stock market's up. Investors are doing quite well. Savers are doing quite well. Seniors are finally earning money on their cash. What's not to like about that? The housing market? Oh, the housing market has been rising for years. It's been getting tougher and tougher. It didn't just suddenly get tough a few months ago. This has been ongoing for years. But the beat goes on, and statistically anyway, the economy is in really good shape. Everybody has a job. Now, why do people feel so miserable then economically if labor is strong? It's a very simple equation. Because you have to understand, even if unemployment is high, let's say it goes to 5 or 6 or even 7%, that still means that 94, 95, or 93% of the population has a job. 96% of the population has a job. And for the people out there who do have a job, they're asking themselves, am I getting more for my money or less for my money? It's very binary. If you're getting less for your money, you don't feel good about the economy. If you're getting more for your money, you do feel good about the economy. Now, let's understand a couple of things. One of the biggest changes since the Great Recession has been the market share game, or the dropping the market share game. Automobile companies were all about market share domination, sell more units. We could lose money on the units. We could make no money in the units. We could be selling to fleets, big fleet sales, just get more production, more units sold, market share. Airlines just wanted to fly more people. Profits be damned. Too much capacity. Too much capacity in automobile manufacturing. Too much capacity in the airline industry. And then the energy industry. Just drill and pump and drill and pump. It turned out to be very bad for the energy industry because oil companies had these boom and bust periods. But all three of those sectors, they got religion. Profits above volume. And that has resulted in a big change of why people are paying up for things. Just those three things alone has made a big difference. Remember, you used to be able to get a great lease deal on a car that you ordinarily couldn't afford. You used to get a great deal on an airplane trip because there was spare capacity, so you found tickets last minute, and that was great. I just flew. I've been flying a lot lately, and let me tell you, every flight I'm on is packed, no empty seats. And I'll fly at 6 in the morning, I'll fly at 9 o'clock at night. Doesn't matter. The flights are packed, jam-packed. And then energy companies are actually doing very well. In spite of the fact that you don't see stock prices of energy stocks going up, energy companies are doing quite well. And they are drilling a lot, by the way. We have record production in the United States. There's a lot of things that are going on, but ultimately for investors, these are what making the stock market a better place because corporate health is better. Disney came out with blowout earnings. Let's take a look at that. Share my screen. Disney is up almost 7% aftermarket trading. That is a pretty big move. It's not too far from its year high. Taylor Swift announces that her Eras tour, forget the exact name of it, is going to stream exclusively on Disney. That's not the kind of thing you watch once. So the fact that Disney is going to have that exclusively is a big deal. Disney is going to be streaming. I think everyone's not going to be able to get streaming access to ESPN. Plus, they're doing some streaming for ESPN with Fox and Discovery as a bundle. They're basically doing everything they can to look more like Netflix and less like Disney. So things are pretty good and improving with Disney, plus the stock has been beaten down for so long. Plus, it also looks like a lot of the political fighting with the DeSantis administration in Florida has come to an end. So Disney all of a sudden is looking like a cheap stock. And there's been a lot of pressure on Bob Iger, the CEO, but he delivered what he needed to deliver. And I'm sure a lot of the pressure is now off him. What else are we looking at? ARM Holdings up almost 30%. They make chips that go into virtually everything, where they make chip designs that go into virtually everything. We spoke about NVIDIA, 52-week high today. All right. Don't mind me. I am not wearing my glasses today, and I can't see anything. The only ones I have with me now are my sunglasses because I left my regular glasses in the car, and I don't feel like getting them right now. All right. So what else do we have here that is significant? Saving for retirement. We talk about that all the time. Oh, and here, okay. Year to date, Apple is down 2%. Microsoft is already up 8%. Amazon up 11.76%. Do you know Amazon in a couple of years could be doing $1 trillion in net sales? Doesn't mean they're making $1 trillion. Just means that they'll be selling soon $1 trillion worth of stuff being moved all over the world. That is mind-boggling. Amazon up almost 12% in the year. NVIDIA up 40%, almost 40%. That's significant considering it was the biggest winner in the S&P 500 last year, up over 200%. Google, which is Alphabet, up 3%. Meta up 30%. I'm surprised they have Google not. Well, they just put the symbol. That's why. And the S&P is up 3.5% year to date. So the large continue to dominate. This is not getting into big winners like Costco, JP Morgan, Eli Lilly, but it's not just the largest of large caps tech stocks that are moving up. Ford had a big day today after a pretty strong earnings season. So a lot going on, but a lot to be optimistic about. It doesn't mean you throw caution to the wind. You still have to be guided, I feel, by your personal finance, your life cycle. And those are the things that we do here. So if you want to get your financial stuff together, you can reach out to me, send me a DM, or go to clientfirststrategy.com. All my contact information is there. You can call me, you can email me, whatever. Have a very good rest of your evening, and I'll be back tomorrow. Thank you.